Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this, I think we have Wednesday. I hope you all had a great week so far. I'm sorry that I'm a little bit late to the party today. I had some other appointment that took a little bit longer than expected, but now here we are. And as always, before we jump into things, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that you see in this live stream / video, so the broker, the charting software, the strategy I'm following, and everything else is linked in the video description down below. And the one thing I always recommend, if you haven't done so, is check out the Elliott Wave principle that you can read online for free or order yourself a physical copy when you use the link in the description down below. That said, obviously don't forget, like, subscribe, enable notifications if you like what you see so you don't miss out on future live streams and videos. And with that, we can jump straight into it. Now today, something happening, yep, we're moving. Today we start off slightly in the green. We can see that the call options that we wrote yesterday for GameStop with the expiration next Friday on the 13th of September are already in green. The price for them hasn't changed, changed, but is not yet at a point where we would consider closing them. We can, however, already create the buy orders for buying them back for $1 to basically close them out as soon as they, in quotes, become next to worthless. Now, theoretically, we could close them out earlier. But for now, we're going to submit that order. So buy back 3 pieces for $1. So submit this one. And then here for that one, buy back 2 pieces also for $1. So should that happen earlier, then we'll go with that. Other than that, depending on the price movement, we might close them, realize that small profit, and write other options instead. Especially for the $35 call options, we would have the option to take our profit and then instead, for example, sell or write, it's called writing options, write $30 options instead to technically, if we looked at, or if we checked that in the strategy builder, so if we were to buy back again September 13th in 9 days, our $35 call options and instead write $30 call options, and we do that for the 2 options that we wrote here, we can see that we would end up with a net credit of $24 per piece. Yeah, so which means we would basically realize that small profit here, and on top of that, get $24 in credit. Yeah, so that's about that. Now let's look at the charts. GameStop, we're going to start by zooming out a little bit. So again, I'm going to just recap. So based on my assumption, we potentially should or may get another push down. With that pattern or assumption only becomes invalid if or when we cross the 29.99 mark here. Until that happens, there is still the option on the table that this is wave A, wave B, and we're in the progress of a wave C or some other corrective pattern for that matter. But there is also the other option that this actually marks the end of the correction, in which case probably would have a combinative corrective pattern where this is part of the correction, separate part. Doesn't really matter that much in this case. Then we would expect this to be potentially wave 1, wave 2, and we currently would be in the 3rd wave. That should then take us potentially up into the area of 36, where we have the 261.8% extension level. Now, for the downwards projection, we would consider that this is wave A, wave B, and that we're currently in wave C that may have potentially finished here, and would then expect another 5-wave push down into the area here to the 78.6 retracement level of this entire movement, which also happens to be the 61.8 expansion level of this potential ABC corrective pattern. Again, if that is ABC. One always has to consider that corrective patterns are the complicated part of Elliott Wave Theory. So there is a slight chance that I actually got this part here wrong. So the assumption that this is only a simple ABC corrective pattern, not some more complicated corrective pattern. Now, if we zoom back in, we can see with the naked eye, we had the movement here, which we assume potentially might be wave 1, 2 or wave AB. And then here in this movement, we can see that we potentially finished a 1, 2, 3, 4, 5 or 1, 2, 3, 4, 5 movement. So potentially we already finished 5 waves up here and are now in a corrective pattern down. Or let's see how much we retraced here since yesterday. So we actually hit the 38.2 retracement level. So it's possible that if we're not going down from here, but we are indeed in the third wave up, that this is wave 1 and wave 2 finished already something like A, B, C, and we are now getting the next push upwards. We'll see if that happens. Obviously, yeah, it's a little bit, I mean, for my positions, it doesn't matter that much. But if it were about like getting in right now or waiting for a potential better entry, obviously the assessment that there's also a valid pattern that points towards another move downwards is not that great. However, I think a partial entry right now still wouldn't be that bad. There's still the possibility that we see a bigger corrective pattern here, so to the 61.8 retracement level, for example, before we see another push up if the pattern with the upwards labeling is actually the accurate one. And even if the other pattern would be the accurate one, where first we would get a push down to the $15 range as said, then after that we should get our movements further up. Now we can see based on the timeline at the bottom that obviously if we were to get another push down to 15 and then the upwards development, an entry right now could mean that basically the position is underwater for a couple of months before it gets into profit, assuming the patterns hold up. Again, it's all just my personal opinion. Don't bet your house on it. And yeah, so much about GameStop. Next thing we want to look at, let's take a look at Novavax, where we're moving there. Yeah, so here basically we have our potential confirmed breakout from the so-called deceleration channel and might actually be in the 5th wave that now slowly will make its way 1, 2, 3, 4, 5 into the area here to basically finish up this 5th wave. So the call option that I'm holding here actually might print quite nicely. Yeah, what else want to look at? Barnes & Noble Educational, still moving slightly sideways, downwards. I recommend you check out yesterday's episode for more details about the labeling here and the different options. I don't want to repeat them since not much changed on an 8-hour chart and there's no point in zooming in further. Hi, Mr. Metrics. Great to have you here. How are you doing? And let's check. Faraday Futures has a rally up, which might actually finally, we almost retraced 100% here. It's a little tricky. With the naked eye, wait 1 second. So we potentially have our 1, 2, 3, 4, and then 5, but then this would need to be a diagonal since we entered the area of wave 2. However, what speaks for that assumption is that we turn around here at the 361.8 retracement, so which speaks for this being a wave 1, 2, 3, 4. Wave 4 retraces more than I would like, but the strong movement that we have here points towards it being the end of the corrective pattern. Now, actually, let's get rid of this for now. If we look like this, oh, that's the wrong one, didn't want to move that one, but it wanted to move, that one I have the other way around. Okay, let's move this one around. So, up and up. The other option would be that we already finished complete 5 waves up here. This is the corrective pattern down, and we're now getting the next 5 waves up. What would point towards that pattern would be that we are turning around here at the 78.6 retracement level, whereas if we look at this part here, we clearly almost retrace 100%. Yeah. In both cases, even if we go further down from an Elliott Wave perspective, then this would be a potential ABC pattern, in which case this line here would need to go here. If that's actually the ABC pattern, so ABC, we can see that the minimum target would actually be at $8.40 and the actual target at $14.67. So even here, we are expecting, or I am expecting, further upward movement. Technically, if you are in that, so if you have a position in Faraday Futures and you use Elliott Wave Theory, you could place your stop loss now at $3.36, because if we break below that, then it's relatively clear that we are in a downwards pattern of some kind. Yeah, whereas on the other hand, On the other hand, we likely have our next 1, 2, 3, and 3 maybe not finished yet. We can add an extension here. If that is wave 1, 2, then likely wave 3 will terminate and turn around at one of those levels. Now we broke through all of them till here, so the next potential turnaround point for, or termination point for a third wave would be at 577 or 570 to 580. Here in that area, if we break through that, we can see the next potential turnaround points till the 861.8 extension. There would obviously be further levels like this, but they are so rarely needed that my template just has them on the chart. Yeah, so we have GameStop, we have Faraday Future, we covered Barnes & Noble Educational, Green Wave, yeah, covered it. We're waiting for something to happen. SunPower, same thing, waiting for something better to happen, some kind of positive news, or for it turning into a write-off. I think what's else interesting today, Maxen, there the pattern became invalid and we got out of the position. We haven't touched the typical turnaround levels yet, although we have a turnaround here at the, or a bounce at the 161.8 extension, but we spiked so far below it that I don't want to consider this being 1, 2, 3. But I think that's more likely the third wave of only this movement. So I expect further downward momentum here. Costs currently red today. Surprisingly, we are now in the territory. We covered it yesterday in more detail. So again, check out yesterday's episode if you want to know more about the labeling for costs, because we entered the territory where this would need to become or be a so-called, in that case, leading diagonal, which means we would still have room down and the stop loss would need to be at 652. At 652, the assumption that this is a 5-wave impulse or diagonal pattern upwards simply becomes invalid. The upside, however, still would be nicely. We see there is still like, what's that, more than 50% upside into the target area for a 5th wave, with 20% downside to the stop loss that we could set here. Max no, moving slightly down. So again, I still expect the push down below the 20-cent mark. And when that plays out as 1, 2, 3, 4, 5, that would be a potential entry point. We would have to circle back to the monthly chart then to see or verify if the pattern there still holds up. So that about that. NEO moving up slightly. So here we have our breakout finally. Yeah, the pattern is not as nice. Originally, we assumed this might be ABC, and we turn around nicely here. Now we'll have to assume, or yeah, we have to adjust and basically assume that maybe we look at a downwards movement 1, 2, 3, 4, 5 ABC, and then we go further down. So right now I would place a stop loss at 363. If we break that level, then we're clearly going further down, or actually one could potentially already use this level here, 368, but the difference is not that big, so might use the lower one. If we're going down, then we're getting an ABC pattern here, from which we'll go down. If this here was the corrective pattern, because we still didn't go we didn't go below 361, which would invalidate the whole assumption. So if this was a valid pattern, then from here we should get 1, 2, 3, 4, 5. We covered Novavax. NVIDIA moving slightly down. Further than what we expected, we are also in diagonal territory. We have to consider the option that I also mentioned yesterday, that maybe this actually is not the entire ABC correction, despite it turning around at the right levels that usually would help us confirm such movements. Maybe this is indeed also a diagonal 1, 2, 3, 4, and 5. So if we break below the mark at, what do we have here? I covered it yesterday also in more detail, 1979, then we would have confirmation that we're in a 1, 2, 3, 4, 5 diagonal downwards. Then we get another ABC corrective pattern upwards, and then we get another 5-wave push down. Right now, I still would expect or consider yeah, let's get rid of this one for now. Consider an upwards move, yeah, more likely, especially right now if we indeed bounce at the 78.6 retracement here. So still the option ABC, and then 1, 2, 3, 4, 5 for a leading diagonal up. Riot, we wanted to look at it yesterday. Maybe we get to a chart to load today. I had an alert at $7 something yesterday go off. We fell a little bit below that now, so but we didn't get to look at the monthly chart. Let's see if it loads today. Or not. Okay, don't have time for this today. SMCI, where are we going there? So we're still in the downwards movement, as said there. We reached the minimum target for a fifth wave, but I think we zoomed in last time, and I think there should still be another push further down that takes us. No. We have the big pattern ABC potentially, and so potentially we have actually our turnaround point here. For an ABC movement up or for the next 5 waves up. So it could be that this is ABC, the entire correction finished, and we get another 5-wave impulse up. Or it could be that this is 1, 2, 3, or 3 in progress, 4, 5. Then we get ABC and 5 waves more down. Right now, I think we'll have to keep an eye on if we bounce here at 415. A potential point to enter would actually, like it's hard to pick. I think it wouldn't be the worst idea to enter right now, obviously not with everything you own, but to consider a smaller position under the assumption that actually the correction might have finished here. No, Tesla, don't care much about it. Yeah, so SPY potential, here we went higher. Yeah, this here is 564 and this here is lower. So this thing here actually, but then we went lower here. So maybe we finished wave 5 here. I think we're still in fourth wave territory here. So 1, 2, 1, 2, 3, 4. So in this case, we don't need this one. And that one needs to be adjusted to here. That one can get away. Yeah, so. And as for the retracement that we did here from no, that's the high point. Yeah, 563.68, 563.91. Nope, 564. That's actually the high point. Yeah, so I have to make a few adjustments here up so that we can get rid of. And that goes there, and then that also needs to be adjusted right now for this. And this here we can draw like this. We see that right now we would be bouncing at a 38.2 retracement, which is a very common turnaround point for second and fourth waves. So 38.2, 50, 61.8 are common areas where corrective waves finish. However, on the 4-hour chart, we cannot really see an ABC or corrective pattern here. So this might only be the first wave, so A, B, C, to maybe 61.8 in the end. But we should get an ABC pattern for wave B here as well. And I guess the Nasdaq will look similar. Yeah, so here same adjustments apply, so can get rid of a few things that we have on the chart. Again, I really recommend, if you're curious, to check out yesterday's episode, covering a little bit more ground there, since I actually was on time. Question 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. So there might be another push down. We see it right now, maybe potentially starting happening. A little bit lower, maybe to the 76.8, 78.6 retracement level. We're still good pattern-wise until down till 17,749. Yeah, and I think that's actually it. Do we have anything else we really have to look into? No, we can circle. So since Riot isn't loading, we can circle back for a second to PFAB. We see we bounced at the 661.8 extension level here. So that likely marks wave 1, wave 2, wave 3. Now wave 4 will develop slowly, might even happen in the same candle since we're looking at a 4-hour chart. So again, A, B, C. if we worry about or are curious about how far we go here, we could use a retracement on wave 1, where we retrace 61.8%, which means for the third wave, we would expect a 38.2% retracement. So down to $5 approximately, again, as an ABC pattern or another corrective pattern, before we then get our fifth wave further up. Yeah, no point in zooming further in. So we see even on the hourly chart. But yeah, so I'd expect, it doesn't have to be, it's also sufficient. It doesn't always happen, but if we, retracement. So the 23.6 retracement is also sufficient for a corrective wave, but it's not on my regular template because usually we reach at least the 38 point, or more frequently we reach the 38.2 retracement level. Again, I think there is still another push up to come, and after that push, we'll get an ABC pattern, and then we get another 5-wave push up, and an ABC pattern, another 5-wave push up. Yeah, and with that, we rushed through everything and actually covered all things that are essential. There are no requests in the chat, and I still have a full to-do list with a bunch of other things, so I'm actually going to call it a day here. Personally, I'm going to keep my portfolio the way it is. I might consider switching out like not even rolling, but buying back and closing out my $35 calls to lock in whatever small profit there is and basically get some extra premium by writing the $30 calls. Problem is, the longer I wait, so the longer I wait for the more profit to realize here, at the same time, the premium for the $30 calls also drops. So I think it doesn't really matter when I do it. On the other hand, the big question is, if I expect, or if there's a chance for GameStop to shoot past 30 within the next, what do we have left, 9 days, then it is smarter to just hold the $35 calls, because obviously it makes a $1,000 difference in potential profit, versus this only makes a $25 difference in what I would have right now. So maybe I'll just hold them and we'll keep our regular orders live to close them out for $1 if that happens. Yeah. And then as said, yeah, that's it then for today. As always, thanks for tuning in. Again, don't forget, like, subscribe, enable notifications, so you don't miss out on the next live streams. And I hope to see you in one of my other episodes, or in one of the other episodes of Daily Market Mastery in the future, usually around 5 minutes before market open, but sometimes it's set a little earlier, or like today, unfortunately, a couple minutes later. So again, hit that subscribe button and enable notification. Thanks for stopping by. Have a great rest of the day, and then see you all tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.